Hello to all traders and welcome to this Wednesday's Market Insights video provided to you by Orbex. Today we're going to talk about gold and oil. We've seen the dollar rising yesterday. It's not just because Fed chair reiterated that there's going to be more stimulus needed, but there was also a bill, actually ready bill, from the Trump administration for an infrastructure bill about, I think, if I'm not mistaken, they're talking about $1 trillion gone into infrastructure. Now, when we take into consideration the surprising US retail sales, that dollar was really supported yesterday. All the majors fell against it. Gold also was supposedly to move against the dollar. I would say, however, that it did actually hold its gains quite respectfully, and that's because central banks show a more firepower in general, because also the UK, the BOE, pledged to support the economy with £100 billion, if I'm not mistaken. Now, the situation there, however, is going to be different. We'll have the Brexit talks. Australia is also waiting a Brexit deal by the end of 2020. Now, if we're going to get this, we do not know. Are we going to get a deal? I don't know. Are we going to get a bad deal? Well, a bad deal is still better than a no deal. So, in my opinion, even a bad deal will be a good deal, okay? Now, going back into the gold, gold is highly uncertain, okay, from a technical perspective. So, it looks volatile. We're going to explore what's happening there in a few seconds. Now, when I talk about the oil quickly, we've seen the API weakening the demand, of course, of oil. Oil slid a little bit yesterday. It was also on a slide before that, because we've had, of course, the second wave coming in the US and also China. And that now, to me, seems a case where we need to look at how oil demand is going to pan out in 2020 and 2021, okay? And the truth is that the IEA is warning that demand for the oil is set to last, the drop is set to last up to the end of 2021. So are we going to see another decline? Well, that's a very good question. And we're going to see what's happening in the oil markets after we just have a quick look on gold first. Now, on gold, well, we were looking at this opportunity. Now, we do know that we are consolidating, and the consolidation zone looks quite big, okay? So there is high volatility, there is a very good range. Consolidations usually are followed by breakouts. Is it going to be on the upside or the downside? I think it's going to be on the upside. Now, going into a bit of more of a medium term, we're looking at this W, X, Y, X, and Z, because we want this to be a triple zigzag. Now, purely because of the RSI signal, I believe that the last move up here, it's an ABC, and it hasn't finished yet. And I think it will finish around that 1751, which is the 61.8 Fibonacci extension of waves A and B, right? So that means I'm looking at this to be a 1, 2, 3, 4, and 5, very small 5 usually, okay? Of course, that will suggest we're going to see a continuation down, okay, to take out wave Z, and this would be a triple zigzag with further upside coming. The other scenario is that's ended down here and we're moving up with a 1, 2, 3, 4, and 5 is going to be a last upside to move for wave 5. But I doubt this is the case, because we didn't cross below this previous low over here. That's the 1662. We only came to the 1669, and that's why I also think this is going to be a triple zigzag, because we'll need another low below this previous W wave. Okay, because usually, I mean, it's very, very, very rare that we're going to see a truncated zigzag. It is indeed an existing pattern, but I don't think we're going to see something like that. Now, the other case, of course, is that this is a very nice triangle, okay, which is a very similar pattern to the triple zigzag that we're looking at here. And I would be surprised if we get that. Now, with the triangle pattern, the situation changes just a tiny bit, okay? The situation, well, it would probably suggest that this is an A, this is an A, B, and a C, okay? And this is an A, B, and a C. So we're moving, we're not going to see another high. And that means this signal is just purely a false indication, okay? So one or other, I would strongly recommend to keep an eye on the Fed's testimony today as well, okay? Now, let's jump on oil quickly. Well, we talked about this move up here being the final wave to the upside. Okay, 1, 2, 3, 4, and 5. That's wave A. We're expecting wave B to end. And because of the structure of this move to the upside here, it is indeed corrective. I mean, at least I look at it as a correction because it has 5 waves in the upside. I think this is wave A. So gonna get a wave B. So I'm expecting prices to go to 36. And then wave C to take out wave B. And then from B, we're gonna see another impulsive move to the downside. 5 waves. We're gonna get out wave C, then W, X, and Y, because I do think this is going to be a W, X, and Y. And this is going to take out wave B in the intermediate degree around the 2340. But if it's a W, X, and Y, usually W, X, and Y complex patterns go down to the 78.6 Fibonacci. Okay, so I wouldn't be surprised if we see prices heading back to the 1367 and then move up to take out wave C. That would also be wave 4 because I do see this as an ending triangle, right, in the primary degree, which means we're going to get another move to the downside. Of course, it's going to be another ABC, right? So 5 waves, 3 waves, and 5 waves, and potentially to new lows. The other case is that we've had A, B, and C, okay, and this is now a 1, 2, we're going to see 3, 4, and 5, and then that's going to be wave A over here. Then we're going to see B, and then we're going to see C. So it's the one or the other. But on the short term, and since we got the EIA yesterday really indicating, suggesting that, well, oil demand is not good, as we know, and worse than expected as well. If we get the same signal from the EIA today, then the 36 is likely to be done, and then potentially we might see something coming in the news. So this will be all for the day. Thank you for watching, and I will speak to you again tomorrow with our FX Miners market insights video.